What is happening, good people? We are here for Macro Dirt Podcast number 26. I'm here with my man, Jared. I comb my hair with a snowball, Dillian, and my man, JJ, Johnston. And we're going to introduce him in a moment. How are you guys doing today?
What's up, candy ass?
That's me.
Doing well. Thank you.
Yeah, man. So let's introduce my good friend, JJ, who has joined us today. JJ currently writes on Substack under the name Alyosha, and he writes brilliantly, mostly about, futures markets and commodities markets, but writes brilliantly about everything. He's a very dear and old friend of mine in the markets. He's been trading oil for almost half a century now. So JJ, tell our audience where you started so we can start that conversation. And thank you for joining us today, man.
Thank you for inviting me to be here. So yeah, I've been trading for almost 50 years. I got started in the mid 70s as a runner on Wall Street, hung around an office, did everything for everybody, got to be well liked, finally got sponsored for a Series 3. I made some money, as a sales guy, especially in gold early in the 70s. And I bought seats on the exchange. I went to the floor, and I've been, trading gold and oil ever since.
So JJ, you have a very specific way of following the markets. You follow them like a futures trader, and maybe that's why it makes them so interesting to read. But why don't you tell us about what you think about the oil markets right now and kind of what's driving them?
Well, okay, so there's not a lot happening in oil, and there's absolutely nothing technical that I can see that implies we're going to have a big move. Although everybody, tries to pump it up or talk it down. We've been locked in a range for 2 years, pretty narrow, except for a couple of excesses up and down, low 60s, up in the high 80s, or maybe even touching 90. But it's really been about a $75 commodity, and it's still there.
Yeah.
So, it's unresponsive to narratives. I thought the Trump narrative would be something that would get some traction and, bring in some money, but that didn't work. The war didn't work. The Russia stuff didn't work. Naturally, I think, you saw me if I go a little too far with this, but
it's okay.
If you look at the data, the demand for products, finished products, hasn't really changed at all in 20 years. And the price of gasoline right now on the board in the harbor is like $1.95. That's cheaper than it was in 2005. And if you deflate that, adjust it for inflation and so forth, gasoline today in $2,005, it's wholesale in the harbor right now is about $1 a gallon, which is about what it was when I was a runner on Wall Street. You know what I mean? Well, it's just a little bit cheaper, 75 cents then. And in the 80s, if you pull into the pump, that's about what you're paying. So where's it going to go? If it's going to go lower, it's going to be driven by products because the oil crude is artificially high, which means refiners are going to push more through the refineries in order to maintain revenue. So we've got a surplus of distillate. And gasoline is weak. It's weak, but it's winter. Anyway. So if the Saudis can sustain oil prices where they are right now, and we go into driving season, I think the product's going to really tank. They really tank. It'll probably be enough to drag oil down into the low 60s. So there's that, and I don't see Trump doing anything that's going to improve the supply side of oil. So
there it is.
Negative, slow grind down, led by products. That's what I'd say.
Totally fair. You got any pushback on that, JD?
No, man, he's the expert. That's a pretty good. I've been sitting here staring at the chart for the last 4 months, figuring it and trying to figure out why it doesn't go anywhere. And there's the answer. So
yeah, amazing when you think about how things really haven't changed much, if at all, in the oil market. It's something that we combust and pump every day, so it finds prices where it's comfortable, and it just finds prices where it's comfortable, and that's kind of the end of the story.
Yeah. Well, there's a reason for that. First of all, the oil business doesn't like volatility. It copes with volatility.
Mm.
Really, crude oil is worthless unless it gets to a refinery, and it comes from all over the world and moving it around. It's incredibly hard, plus dangerous and expensive. So the meat in the sandwich is what happens downstream from the refinery, right? Once it gets to the refinery, then it has value, right?
Yeah.
And what the industry would like is a stable price for oil and a stable price for products downstream. And they just want to make that margin. They don't want to gouge anybody or jack anybody up. They're like anybody else, that's in the business. They sell burgers like McDonald's. You know, they want to make the money from whatever it takes to make that Big Macs and get people to buy a lot of them.
Yeah. Yeah. And oil, I think, they just realize that they are the medium, and it's a great enough business as it is being the medium there. So, I mean, I think it's a really healthy attitude for them to have. Do you see any opportunity in natural gas, JJ, just while we're talking about energy?
Well, I'm long it. I
There's the trader in you.
I have a profit now. I didn't have one this morning.
Why are you long? What's in your ear, or what are you seeing?
I think there's a lot of mojo in the United States oil business. It's been, struggling with the Biden administration for 4 years. They've been able to suppress oil in a number of different ways, permission to build infrastructure and so forth. And natural gas, we have an abundance of it. That's no secret. And, we've been fracking for oil, and every time you frack for oil, you get associated gas. And the problem with that is it's, our industry is configured to move and refine oil. We have a certain amount of built-in infrastructure that's going to consume gas, particularly in houses and things like that. There's nothing in transportation. Although the infrastructure has grown anyway, and if Trump comes in, it's going to leap. So if you take these companies like Plains Americans, Energy Transfer, Kinder Morgan, thousands and thousands of miles of pipeline that can be extended and expanded very, very rapidly in order to move gas off the fields into the marketplace. And LNG, although it's capital intensive, it takes a long time to build the loading and the processing of creating LNG. And there aren't a lot of companies that are in it now. I think that those are going to populate very quickly. Relatively quickly. Nothing happens fast in hydrocarbons because it's expensive to make those commitments, but relatively quickly, I think. And the marginal difference right now, we're trading gas now at 3, but when earlier this morning, in some of the backs like Feb and so forth, it was trading at prices where I traded natural gas in the pit in 1992, right? So that's 32 years ago. And it's still a nominal price, same nominal price. So, I mean, natural gas, really, if you deflate that for what we're paying for, because wages have gone up, everything else has gone up. Natural gas is, I'm just going to take a shot at this. It's like 25 cents.
Yeah.
Right?
Yeah.
On the board. It's a tenth of what it was, or let's be generous and just say it's a fifth of what it was. So it's the cheapest, cleanest, most abundant hydrocarbon that we have in the United States, that's for sure. We don't have any substitutes for it. I have a feeling that that's going to adjust up. I think I've traded natural gas in the Y2Ks at $10.
Yeah, I was going to say it's been this price, but there's been 2 round trips to 10 in between, right?
Yeah. So I think that would be a problem for Jay Powell. But it strikes me as right now, it's so easy to be long at 3. It's easy to be long there, and it's easy to be long a lot more than I would normally be. Like I'm not going to put that kind of position on an S&Ps. I'll take this loss, but other stuff that's kind of way out there. That's a different story.
Very interesting, man. Thank you for that Really great historic take on it. Let's go to another place in markets. I want JD to take it away. Where are we going? What's on your mind?
Well, we got the Fed meeting tomorrow.
Yep.
So this will get released before the Fed meeting. God, the bond market has just been a horror show like the last 6 or 7 days. But I don't know. I think, they're going to cut 25 tomorrow. That's pretty much baked in. We had retail sales today, which were a little soft. So there's no chance of them not cutting. Mm-hmm. It's going to be interesting to see what the directive is. I mean, I think this is kind of an important meeting, right? Because I think people were focused on the 50, then the 25, and then the 25, and then what happens after that, right? Mm-hmm. So if you get some hawkish language about being vigilant to inflation, or if you get some dovish language like being data dependent, like this is what's I think tomorrow afternoon it's just going to be a chop fest. I think it's going to be like a 75 handle range in the S&P up and down, and it's going to be pretty nuts. And I don't think people are prepared for it. It's December. It's the third week of December. You're getting towards Christmas. Nobody cares. I think it could be a little bit of a surprise. So
I love that point that people aren't prepared for it, because it rhymes with what's going on in the market. We've had that kind of meme going around FinTwit where, 1 month protection is like historically cheap now. People are bulled up and long. The futures position is at a historically long place. And you look around and you're like, how are these longs all so safe? And that we people can have a bullseye on those positions, but we're not taking anybody out. And I feel like the answer is like, look at Bitcoin. Bitcoin, if it's a levered bet on US risk assets, the thing is going berserk, and carved a new high this morning and things like that. So I think that gives the S&P long and the risk on traders every reason to stay in the game. Like, it's hard to make money at the highs, like JJ said. The shorts have all the cases in the world for a pullback. The longs have all the money. It's not that's kind of where we are, I think, in the stock market right now. So yeah, I expect a lot of volatility going through this. It's a good point that you make, because we just had PPI come out a little bit hot last week. And if we let the markets tell us what they thought of that, it was interesting because the dollar rallied, bonds got sconed, right? Sold off hard, gapped lower, dollar rallied, commodities were able to rally with a stronger dollar, which was a great sign of relative strength to me. And nothing took off in the stock market at all. The stock market was just giving back the tech gains that it had put up before PPI came out. So it's just interesting to me that we've got the first glimpse of potentially hotter inflation, and the market had that reaction. I don't know what it means yet, but it certainly kind of doesn't change anything.
I have two things for you. I have two things I want to talk about.
First of all, can you tell me, does Carolyn know that you borrowed her blazer today? Before we go into that? No, go ahead. It's lovely. Go ahead.
It's actually a warm day here. It's like 70 degrees, so I'm wearing the light colors.
You're wearing your summer whites, dude. It's December. Yeah. Okay, it's fine. As long as we acknowledge that, we can go forward. Go ahead. What are the things we got?
The S&P Value Index is down 10 days in a row. It's never happened before in history.
Why? Why is that?
Nobody knows.
Yeah, nobody knows.
Nobody knows. And if you look at a chart of S&P versus Dow, or S&P versus RSP, they're equal weighted, like, it's completely diverged in the last 10 days, right? So I'm not one of these people that interprets everything as a top, but this kind of seems like a death rattle to me of growth, right? I don't know, maybe. Anyway, I'm going to put that off to the side for a second. Okay. The other thing I want to talk about is Canada. And if you've been paying attention to what's going on in Canada, Chrystia Freeland, who was the finance minister and the deputy prime minister, resigned. And she wrote this letter which flamed on Justin Trudeau. So the government in Canada is in chaos. He appointed a new finance minister. Everybody wants him to call an election, but Jagmeet Singh, the head of the NDP, won't call an election because if he leaves office too early, he doesn't get his pension. So the Canadians actually started to GoFundMe to get him a pension so he'll call an election. But everybody wants Trudeau out of there. And the backdrop of this is CAD, the Canadian dollar, is on its ass. It traded below 70 cents today in Canadian terms. I mean, it is. And when I look at the chart in DeMark, it's a 913.9 classic pattern. And like Canada is in crisis. Like, you know how I say, like, you have to buy shit when it's scary, when it's absolutely uninvestable? Like, that is Canada right now. I think it's super interesting. So,
Do you think that there's any spillover? Like I kind of look at that as a continuation of the bifurcation between, US and all the other countries' equity indices. Do you think that that's something that can spill over and pull them down, JD? Or do you think it's just more of a sign of that where US is the place to be and the other countries aren't?
I don't think it's really like in terms of, I don't think there's really like any economic spillover, but I think what's interesting is that there's a lot of anti-incumbent sentiment out there,
Oh,
right?
yeah.
And if you look at Germany, like Olaf Scholz just had a no confidence vote, so they're going to be having elections in Germany. There was one other place, like, I mean, France, right? France like had a no confidence vote for their prime minister. He's out. Like, there's a lot of instability. There's a lot of anti-incumbent stuff. And one of the things that Chand, Chand, right? Chand Saran,
Of course.
he tweeted about last week an article. Basically, Javier Milei has started a global revolution. Global. It's not just Argentina. He started it. It spread to the US. It's spreading to other countries. This anti-bureaucracy movement. Like, so when people say, you can never buy Europe, right? Like, Europe is dead forever. They have a living standard below Mississippi. Like, they have no innovation, like, whatever. Like, I actually think it's an interesting time to buy Europe. All it takes is for, I remember that movie Inception, right? That quote, like, an idea is like a virus. This anti bureaucracy idea is like a virus, it is spreading everywhere. And if it spreads to Europe, they're the cheapest assets in the world. You want to be buying them hand over fist. So,
Man, I like that idea, especially, Shan's comment was, there's going to be a globally competitive situation going on in deregulation. He believes that this is going to catch fire so widely. And that is certainly something interesting. Sentiment and technicals couldn't be more lopsided with the US out ahead of Europe on the charts and with nobody even wanting to consider investing in Europe because they're basically an open air trinket market for tourists right now, as far as I can tell, with all the deindustrialization that's going on there. But I want to just get a clear view on the stock market out there as we head into the FOMC. We're trading at 60.50 in the S&P, off from the highs of around 60.90. I'm still bullish as hell. I mean, I know that I see that the risks are, a large futures position, cheap protection, etc. But like the CNN fear and greed curve is like stuck in neutral. The curve itself is range bound. Rates are mean reverting. When we get a sell off, there is no strong sell off that incurs any huge downside print in the tick index. There's just a big, ugly rotation. And that's why we keep bobbling back to 50 points through to the highs and making a new high. So I'm staying bullish here. And I want to see if you still think that we curl over in equities. And I'd love to hear what JJ, if you have an opinion on the S&P.
JJ, go first, then I'll add my 2 cents.
Go ahead, JJ. What do you think? Anything on the S&P?
I don't think much of the S&P. I think we're kind of like the three bears. You've got the Nasdaq as the Papa Bear, and S&P is like the Mama Bear.
Yeah.
And the Dow. Jerry was just talking about the Dow. The Dow is kind of an old school stock index, which doesn't have a lot of glitter or shininess to it. I think I know this is going to sound a little bit out of the box. I think there's a squeeze going on in the big names in the NASDAQ. And that's really, kind of an extraordinary thing to think about, because we're talking about a handful of $1 trillion stocks. It's really, I think it's greater now than like 37, 38% of the market cap of the S&P index, the Mag 7s. But those are stocks which, are moving so much, generate and so much in terms of expansion of market cap, that there's no way it could be done unless it were being done with a very modest amount of shares. And this goes back to the days of the pit, right? So say I want to knock down, silver and hit some stops, it's about 10 cents below me. I could artfully do that with 100 lots, just carefully, just by making noise, one lot printing, right? As soon as every chance I get for a low print, I get a
Too
low print,
low.
low print, I get a low print. Finally, I get there, right? I think there's a lot of that going on now, in these names, and for good reason, because compensation is going to drive really the year-end thing. You know, these guys have got so much money in this thing; they're not going to let it go down until settlement on New Year's Eve. They really aren't, or whatever that whatever their TRSs are, or whatever it is that they've got, where they're going to book their comp. I just can't see that happening. And there's so much control, regulated control among the big players. So nobody really has an axe to grind in the Dow, and it's getting just ignored pretty much. So what happens next year? Who knows? I am not a buyer of these big names with Trump coming in. I think that he's not happy with monopolies. He's more for let's get some factories, smokestack stuff going, things like that. So I think those are the names you want to look at. AI is going to do what it's going to do. One last thing I'll say: there's no such thing as a risky asset, only a risky price. Period. It doesn't matter if it's Bitcoin or gold or whatever it is. The like natural gas. Like no other market I know of. There's particularly March, April natural gas, the spread that no one dares to trade now.
Yeah.
It used to be like the Widowmaker. It's the riskiest, apart from silver, the riskiest market I've ever traded is natural gas, right?
Yeah.
But now it's not a risky price. It's very, S&Ps, they can rock your head. I know that. I've had it. I've got my share of scars from that thing. But that is a risky price. It's an incredibly risky price. And just because it goes down 1,000 handles, that doesn't mean anything. It just means the price got better. But it's still going to keep doing what it does, stock market. So
a lot of wisdom in that. I like that. What do you think, JD?
The older I get, the more I'm just focused on price action. What does the market do on an intraday basis?
Yeah.
And we have had the same fucking price action for like the last 2 months, right? So I'm not really, like I have some small shorts, but I'm not going to go limit short S&P until we get an outside reversal or it closes on the lows. I cannot remember the last time the S&P closed on the lows. And if you want to think about what it means to close on the lows philosophically, what it means is the market would have kept going down, except we just ran out of time.
But you're saved by the bell, right?
Saved by the bell.
Yeah.
So I haven't seen the market close on the lows since August, And the funny thing is looking at the price action of commodities, particularly the ags, like it's the same freaking thing every day. Open up 1% higher, close 1% lower. Open up 1% higher, close 1% lower. Every single day in commodities.
That's funny, JD. Yeah. I have a similar kind of print on my brain from that. Like what I see just happening in the stock market is, the S&P is doing, the S&P is rotating, but what we just had were semis were just backed up to 200-day moving average and trend line support. NVIDIA at the top of the semi tree is got a brutal head and shoulders, long form top on it that it's just finally starting to curl. But before that happened, what's AVGO, Broadcom, right?
Yeah.
Broadcom reported and took off like a bat out of hell, went up like 20% after report. So that kind of changed the calculus on that whole idea that the leadership was changing and semis were going to curl over and some of these Trump trades were going to start taking the lead, like cloud storage, like broker dealers, like financials, like internet, like software, right? But because of that Broadcom curveball it threw. Semis kind of hung in there, and Nvidia wouldn't back off because it kind of just negated its pattern for a little while because Broadcom was going berserk. I feel like that can still happen. To me, it still looks like semis got way too far out in the lead. They're going to become a source of funds at some point. We just have to kind of live through this Broadcom episode that lifted all boats in that sector. But we'll see. I agree with you. The price action is very similar every day where there's like kind of a U-shaped range and short covering into the close. So I'd love to see the size of the short position that's out there because we know the long futures position is historically enormous. There's got to be a short on the other side of something. I don't know whether it's a huge short in Nvidia or semis or some other sector of the market that just won't go down. Maybe it's Mag 7, but like JJ says, maybe they're squeezing and that's what's keeping the whole market up and alive. But I don't know. I think we're going to see.
I don't think they're squeezing it. I just don't think there's enough of them.
Fair enough.
So, right. I mean, it's so broadly held. And if particularly if you're BlackRock, Goldman Sachs, JP Morgan, all these, the big names, money center banks and so forth, where the stock is, they're not selling it. Yeah. So all you have to do is just, suck up the tiny bit of float and then high ticket, and you're gonna get higher prices.
Spoken like a true futures floor veteran. Just high ticket, man, right? Just put the high prints up. One trades, right?
Yep.
Those are my favorite part about being in the ring was seeing, let's just talk about this for a second, was seeing locals who were down generally in the bottom of the ring near the ring reporters. Like if they were long and the market's, 7 bid at 8, 8 bid at 9, they're trying to trade O's, right? Like right through everybody and tell the ring reporter, hey, O's trade, just so you know, like make sure you get the O print up, right? And like the ring reporter's looking around like, wait a minute, did it really trade there, But that was a really, really fun part to see what goes on in the underbelly of the futures markets.
So if you watch the way these stocks trade, then I do, because I buy them, but I don't hold them. I try to buy them, like sometime around 1:30, 2 o'clock, particularly watching a 5-minute chart. And if I'm seeing TWAP activity, and you know what that's like, particularly if you have several TWAPs operating against each other, it's going to vibrate its way up, and it's going to vibrate its way up when it's staying with the VWAP line going up. So you just kind of get on it like an escalator.
Yeah.
And wait. And it usually, when it's not, you don't have to be a rocket scientist. You just have to watch it. And you can get a few handles out of that going up into the close. And if it's, I think we're going to see a lot of that in January as money goes to work. So the last couple of hours is a great spot to be trading S&Ps alongside.
I really agree with that, JJ, because having come from, a really robust execution side of the business, you just mentioned, I think some money is going to come into the market or be put to work. That's kind of what the market trades like when in a bull market, in a bull market that we're in, we shouldn't be shocked to see this thing close well every day. That's what a bull market is, because everybody that's on the other side of the screens is saying, okay, I got more stock to buy on my pad and the clock is ticking. Take the limit off this and buy my stock. You know what I mean? Like that's bull market behavior. Like in a bull market, you should expect things to go from red to black, red to green, and close on highs and recover from dips and things like that. So I don't look at it as the same range as much as I do as bull market behavior, because we all know that in bear market behavior, man, you get a peek at any intraday pop and sell that, and then you're making money because in bear markets, they always close on the lows. Otherwise, it's not a bear market. So those are just some of the dynamics that I try to keep in mind alongside some of the things that have been happening. Is there anything that we haven't discussed in the tape that's relevant and topical on market side? I think we did a pretty thorough job. We talked about rates and stocks and commodities and a lot about it.
I'll say one thing about Canada. I got the chart here.
Yeah.
So the 20-year average open interest for CAD futures is right around like 160,000. And from, I guess, about February 24 to now, that open interest is now almost 500,000.
Wow.
And so this is what I'm thinking in my mind. I grew up 50-50 Canadian American. I'm an American citizen now, but I have a lot of family in Canada. I own a house up there. So we have now is the rarest of possibilities to have an immense key reversal in Canadian dollars. And in order to have one, a classic, you have to have open interest. It's got to be 3 times its 5-year average, right? In order to have it to meet those conditions, you have to have a volume day with extreme range closing on the highs, because I'm thinking it's going to be a reversal up. Extreme range, engulfing range, closing on the highs at or equal to, pretty much of the open interest, which is outstanding. So you have what happens is this open interest has got to liquidate somehow.
Yeah.
It's like bond open interest is making record highs, right? It has to liquidate. And how it liquidates, it can be orderly, it can grind down, or you can have something like regime change in Canada, which would be tectonic. I mean, if we get rid of this guy Trudeau, Canada could be an explosive economy with their natural resources, the demand for natural resources, and everything else. And what Jared was saying, the trend towards a more centrist government, maybe a little right-leaning, cheaper running, that kind of thing, more industrial, economically favorable, and so forth. Canada would be a great place to put money, especially in the oil stocks. I don't know if you guys follow those. They are always in the ditch. I mean, they're just so cheap.
Yeah.
Yeah. So this open interest is something to keep on the radar.
JJ, that's really helpful. And I'd love for you to give a really brief explanation of why, you don't make a trade in something without understanding where open interest is versus kind of where it was and where that security is in the open interest regimes. Can you just give us your explanation of why that's so important to a trade? Because there are a lot of people out there that step into trades, and just look at price and don't say, let me see what open interest looks like. Where has it been? Where is it going? Can you just break that down super basically, if possible?
Sure. All right. So open interest, think of it like we're talking about Canada here. You're watching the Canada movie. And so open interest is really just the number of people in the seats. And, if the movie is really interesting, you get this. This means there's just a whole lot of money committed to watching this movie in Canada right now. Like right now, open interest is just really low in gold and silver. There's no one watching that movie. It's a dead movie. There's no story. China's buying it. Okay, that's great. But over here, nobody really gives a shit. So open interest is not only the the level of interest, but it's the trend of the level of interest. So if open interest is rising with price, and you have rising volume at the same time, those 3 elements mean that you've got a lot of money coming in. It's expanding. And that means that you're going to probably see more of it. Mm-hmm. And when it stops, that's the first bell in your head. Hey,
I don't see these guys anymore. Yeah.
Seventh inning, and we're down, by 10 runs.
Yeah.
I really want to wait till
writings on the wall.
I'm going to leave the stadium early. So, that's open interest, and then volume, of course, that goes with it. And of course, the most important technical indicator of all is price. If price is not validating narratives, then, something's not right.
Phenomenal. No, that's phenomenal. I just wanted you to give the layman's explanation of why open interest and why it moving with price and volume is something that traders cover and pay close attention to, and you covered it beautifully. Do you have anything to add to that, JD, or anything like that? Is that part of your market following scheme at all, or no?
I wouldn't say on a conscious level, but it is on sort of a subconscious level. You know what I mean?
Yeah.
So
yeah, you gauge it in a different way, possibly than contracts. I would definitely believe that. That's totally fair. All right, so we covered the market theory section. So an off market topics today, I wanted to talk about a little bit about reading. And first, one of the things that I wanted to mention, JJ said something the other day that I love because I think it has to do with why people read us three as authors of financial markets. And it's because JJ, the other day you said, it doesn't take sophisticated knowledge to understand what I think. And I think when you're offering an accountable viewpoint that is easily understood, even though it's in a complex, technical, risky moving market, that's what makes a writer appealing to people that are trying to follow risk and manage their positions and manage their book. But when you go into when you grab something off the shelf, who do you go to? Like what are your reads? Like, who JD, who's your favorite author, or JJ, somebody jump in and start, like, or go back and tell me what's your favorite thing to read ever.
Gosh, I think of that often. I'd say my favorite author is, J.D. Salinger. I like Hemingway. I like Ayn Rand. I love murder mysteries. I love Connolly. I love Nelson DeMille, all of that stuff. So if I find an author I like, I'll read everything he wrote, period. I'll go right through it all.
That is pretty cool.
I generally read history. So.
J.D. Salinger, 9 Stories is one of my favorite books. Like,
really?
I actually never really got into The Catcher in the Rye, not one of my favorites, but Franny and Zoe and 9 Stories are terrific. So.
Sounds like I'm going to read my first J.D. Salinger book.
You'll love it, man.
Yeah.
It's so good.
I'm in. I'm horrible because I am a slave to like nonfiction. Like, I can't read any fiction anymore at all. I have zero patience, like nothing. Only, like, I can only watch documentaries. Yeah, exactly. And I have you in my travel book, my travel bag, JD, is Night Moves is in there. When I go traveling in a couple of weeks, I will definitely get some of those under my belt. But I haven't read a good, like, nonfiction story since, like, like a Nelson DeMille, like, one of those Plum Island or something like that. And those are amazing. They are as entertaining and page turning as could be. So that's probably the lane I would go back in. Have you read anything good, JD, lately? You write so much. I don't know how you'd have time to read anything.
Yeah, I got to tell you, the older I get, the pickier I get about books and reading. It's like if you have somebody who's really a film aficionado, like 90% of the movies they go see, they're going to think they suck. And that's kind of like where I am with books. Like 90% of the stuff I read is just terrible. Reading a short story collection right now. There's a series called The Coolest American Stories. It's edited by a guy named Mark Wish. I actually submitted some stories to him. Didn't get accepted. He's a very heavy editor. So all the stories sound like they're written in the same voice. Just crap. Yeah. And it has like all 5-star reviews on Amazon. I don't get it. So I have a small stack of books in the library that I'm going to get through. I'm going to read some of them over break. But generally these days, who's one of my favorite authors is Michael Lewis. He did such a good job with Sam Bankman-Fried. Yeah. I'm kidding.
He's buried himself, right?
I know Liar's Poker and Fast Boys and stuff like that.
I mean, so look, Michael Lewis is, like anybody, he's sort of a complicated guy, but Liar's Poker to him was a failure because he hated Salomon Brothers. He hated Wall Street. He wanted everybody else to hate Wall Street, and it totally backfired on him. So if you ever see Michael Lewis at a book signing, go up and tell him that you love Liar's Poker.
That's amazing.
He gets like really pissed off. But he's got some good books. But the Going Infinite one, I think SBF paid him like $10 million to write that book. And Flash Boys was goddamn terrible. It like just one of the most poorly researched books, just false in so many ways. Like,
yeah, he was trying to capitalize on how hot he was at the time. He was like, "Oh, let me come out with something else controversial, quick. They'll all buy it."
I will say that guy definitely has a nose for a story. Like he is always in the right place at the right time. I don't know how he does it.
He's like he's the Grant Williams of of regular book writing. I
Moneyball was great. I like that.
Yeah, Moneyball was great, and oddly enough, an amazing freaking movie too. I don't know if it was Pitt or Jonah that made it so good, but that movie was kicking.
Jonah Hill was really good in that.
You know what made it good? It was the streak. Especially the 20th game.
Yeah. Scott Hatteberg walks it off.
There's no way you could watch that movie and not fall in love with it from just that one part.
That's true. That part is for something that really happened is totally unbelievable. I think that's what makes it so freaking awesome. Really cool. Well, that seems like a good enough spot to end on, man. We went really far wide and around the horn here. We got JJ on his first Macro Dirt podcast, and JJ, we'd love to have you back. Can you tell our listeners where they can find you on Substack or otherwise?
JJ745.substack.com. Let's say that again. I never look at it.
That's all right.
I write on it.
Yeah.
JJ745.substack.com. And that'll take you to me.
Yeah. And I would urge anybody that doesn't subscribe to go and subscribe now, because when he writes something and it comes out, I even put the dirt nap down to go read it. So just to let you know, I read JJ first, JD second, and I don't know who's third, but those are my two favorites. So it was really fun to do a podcast with my two favorite authors. Thanks, guys, and hasta la vagina. Until next time.
Hasta la vagina.
See ya. Thank you.